Hello, everybody. I said I wasn't going to do a video, but I recently shaved my head, so I wanted to show off my beautiful head and hair to you guys, or lack thereof. And I'm also just trying to keep myself busy and distracted from the absolute carnage that's happening every day and every minute to this world and my portfolio. Today, I'm going to do something a little different. I am just going to talk to you about biotechs and the general opportunity in biotechs right now, and why I think we haven't seen any M&A in biotech. So it's going to be all over the place a little bit. But first, my overall theme with biotech right now is I think you're almost certain to make money off these marks with a long enough time horizon. So you have basically, call it three different buckets of companies, right? You have commercial companies like BBIO or soon to be CYTK. I put that in the commercial bucket because it's going to have an approved drug. Even PTGX. They obviously also have a pipeline as well, but those companies all trade at very substantial enterprise values. Then you have the zombie companies that are trading at half cash, that also have assets that potentially have value, like ARVN, KROS, SAGE. I mean, we know for a fact Sage has value in its depression drug. The only question is whether it's worth $500 million, $1 billion, whatever. And with KROS, we know they have value in the Takeda asset, in addition to their cash. With ARVN, it's a little bit more mixed. We don't know whether or not the Pfizer drug has value or not. We think it does, but regardless, it's trading at half cash, even outside of that. And then the third bucket, the riskiest, is the pre-commercialization companies, the IMVTs, the Cures, the RCKTs. So in all of those buckets, I see substantial value, okay? And where I've pivoted to over the last few weeks, as you all know, is into the least risky of those three buckets, which is the dead biotechs, the half cash with some assets on top of that. The truth is, though, is that the biggest returns are going to be made in the pre-commercialization bucket, the IMVTs, the RCKTs, the Cures. Those are just I don't really invest in that area because it's too hard for me. But when we see a revaluation in the future, it'll be those stocks that make you the most money. Clearly, something that's trading at half cash can only go to cash, plus whatever the value is of the remaining assets, right? Similarly, the commercialization bucket, the CYTKs, the PTGXs, the BBIOs, these stocks are all tremendous undervalued, right? And there's no real catalyst for them ever to get to fair value outside of a buyout, unless they could start distributing cash to shareholders and doing buybacks, and they can't do any of that for years, most likely. PTGX might be able to do it sooner than the others, but the others are years away from being able to do that. So then you're left to ask yourself, if these stocks are all trading so substantially below fair value, why hasn't Big Pharma started buying them yet? And I think that answer is actually pretty simple. It's twofold. First of all, for the most part, M&A just freezes in environments like this. So if you're going to pay 35, 40, 50% premium, even a 75% premium to last sale, shit, even 100% premium. If you were going to offer 100% premium for RCKT or IMVT, you're just getting back to where the stock was a month ago, right? 6 weeks ago. And no board is going to accept that just based on where the market is today. Those companies don't need money. So you have a bid-ask issue where the biotechs aren't going to be sold for 200 to 300 to 400% premiums. And then you also have a board in Big Pharma that is not going to be aggressive at the exact time when they should be aggressive, which is in time of market turmoil. Your only real risk to me, besides the whole world collapsing in biotech, is that your company needs money and funding. And if that's the case, those are the ones that are going to be the most beat up, right? Because they're going to be discounting impossible capital raises going forward. So my thought with biotech, and I haven't changed anything there. My only positions I have on are ARVN in size, KROS, Sage, and then I have about 8 and 9% positions in PTGX and BBIO that go back to well over a year ago. So they're long-term capital gains. Every other biotech I own is 3% or less. IMVT, Roiv, Cure, ARDX, RCKT, CYTK, all under 3% positions, every one of them now. If you have risk tolerance, I do not right now. The way you are probably going to do the best in the sector is finding the shittiest of pre-clinical biotechs, pre-commercialization biotechs, excuse me, that still has promising assets and has the need for capital in the next 12 months. Those are probably down 80, 90%, and are the ones that are most likely to snap back as hard as you can imagine in a better tape. The safest are the cash-rich ones, and then followed by that, finally you have the stronger companies like the BBIOs, the CYTKs, and the PTGXs. I just find it so interesting because SWTX is $35 today, right? And we've talked a million times about where it would be trading unaffected if they got their drug approval. We didn't account for the entire stock market collapsing and XBI collapsing. I don't own SWTX anymore. I just own the options. They're all going to expire worthless next week. But SWTX, if you believe what my thesis is that they did have another bidder, or maybe other bidders, that have now paused indefinitely. It doesn't really change the fact that there's probably somebody out there that wants to pay $55 to $70 a share for SWTX. And that multiple shouldn't change once we get back to normal times. The only real risk with SWTX is that there's a competitor readout in the second half of this year that would affect their current commercialized drug, where they're currently the only one on market. But I can make an argument where SWTX is, an incredible risk reward here, right? You probably have $5 or $10 downside in a quote unquote break still, and they're fully funded. They have like $400 million in cash, and they're really going to be doing a lot of sales next year. I can't remember what the number was, 600 million, I thought, or something. A huge number, and the valuation just is so undemanding. So, but I don't own it because I can't deal with the marks and with the drawdowns right now, given everything that's happening. So I don't really know what I'm trying to say, except it is possible for all of these stocks to be objectively undervalued and with near certain paths to higher stock prices in the coming years or year. But I couldn't tell you if it's going to happen tomorrow, 3 months, 6 months, a year from now. With the cash-rich names, you need good corporate governance, right? You need Sage to sell themselves to Biogen. You need KROS to shut down and liquidate, basically. You need ARVN to either sell themselves to Pfizer or significantly cut their costs and restructure that drug. I'm optimistic the more pain we see in the stock market, the more likely all those things are to happen. And besides that, I guess I'll keep my eye out for any real insider buying, which hasn't really happened in biotech yet. When we start seeing, and I mean real insider buying, I don't mean like the ARDX guy buying $1 million worth. He's worth like hundreds of millions of dollars, okay? I mean, I like it, but I want to see board members step up, buy hundreds of thousands of dollars of stock, and I want to see it by multiple board members, and that would pique my interest in those stocks. Because all these companies, these boards have levers to pull. They just don't pull them unless they're forced to, right? Or they get some crazy price from big pharma to sell. And as long as you believe that there's going to be a Medicare and a Medicaid and a health insurance system in the country, then most of these revenues should be stable and dependable over the coming years. That's a big if, though. I mean, drug pricing is completely ridiculous, and it's completely arbitrary how particularly rare disease drugs are priced. It's totally a house of cards, and it should collapse. So you are betting on a house of cards and a completely arbitrary and irrational drug pricing scheme stays intact when you invest in this sector. And that is a pretty big red flag, but it's always been there. And I don't think Doge is going to change it anytime soon. But I guess that should be said as a potential game changer. It's all over for the biotech industry if that ever did happen. That's all I got. Nothing's changed since Friday, in my opinion. I keep trimming my portfolio. It's much smaller than it once was, which makes my drawdowns much less. And I'll survive, or I should survive. I don't know whether our country or our nation or world survives, but I should make it to the other side, I think. And everybody stay safe out there and make sure to protect your account. One thing I've been doing as I sell stocks is I rotate some of that money into options. I like 3 to 6 month options in the names I like, whether it's ARVN or I did a little KROS. I have Sage options, a lot of August. Those are pretty liquid. With that, at least I know what my fixed losses are going to be, and I don't have to put up the capital for a tape where these stocks can get cut in half again for no good reason other than they're just a ticker that trades, right? They're not trading on any fundamentals, and there's no bottom unless the companies want to take it into their own hands and liquidate. There literally could be no bottom. So, wish I had better news for you, but happy investing, and I think we're in for more pain across all the markets because I don't think there's any off ramp for Trump, but we'll see what happens. All right, everybody, take care.